The races. Good evening. My name is Amy Bach. I am the executive director and one of the founders of the nonprofit United Policyholders. And I am so pleased to be able to bring you tonight's program on a Colorado home insurance shopping help through our Roadmap to Preparedness program. And I'm very grateful to all of you who made the time to join us tonight, as well as our expert panelists, all of whom are volunteering their time this evening. And then I want to thank my team member, Ben Laterno, on tech. And we're going to get started with the program. So a little bit about our organization. If you haven't heard of us, we have been around for 34 years as a nonprofit insurance consumer advocacy organization. We have a national core of professional and disaster experienced volunteers that help us give you, a consumer of insurance, the straight scoop and help you make good decisions for your household, for protecting your assets. And we've been working in Colorado since 2010. We are based in California, but we have a very strong working relationship with your Division of Insurance. We have worked, I think, 6 or 7 different disasters through our Roadmap to Recovery program in your state. We have lots of volunteers in your state, and we have kept pretty close tabs on what's been happening in your market over the last 5 or 6 years. I want to thank our funders, the Community Foundation of Boulder County and the Argosy Foundation for providing us the support so that we can continue to serve your state. Tonight's panel will be myself moderating, Kelly Campbell with the Colorado Fair Plan, Angela Collins with the Colorado Division of Insurance, Lisa Hughes with United Policyholders, Sarah Lucero, hopefully joining us soon, Lisa Jensen, independent agent with Wolverton Insurance. That's just a little bit about me. I'm a career insurance consumer advocate and an attorney. I have been shaping and leading our 3 programs since 1995. And I know what I'm talking about. So, but for the most part, and I'm just have made it my life's work to translate the jargon and the confusing language about insurance into plain English, so people who are on the buying side and the using side can really understand some of the basics about insurance. Very pleased to be joined by Kelly Campbell, who has the distinction of having helped build the one of the few insurers of last resort to be created in decades. It's a new state government supported insurer of last resort. You may have heard about the FAIR Plan. And with her very extensive background in insurance and public policy, she brought a lot of knowledge to the construction of the plan. And it's been my pleasure to work with her on some legislative matters over the years. And I would say, in the difficult circumstances that we find ourselves right now, you really couldn't have a better person running that ship than Kelly. So Kelly, thank you for being with us this evening. All right. Also, a thank you to Angie Collins, a mother of a young child. So Angie, thank you for juggling on the home front here to be with us. Angie has years of experience helping consumers who contact her agency with questions, and she's been a previous expert panelist for us on some of our post-wildfire classes that we have taught. Thank you, Angie, for being with us. Lisa Hughes, who's on our staff, joined us after losing her home in the Marshall Fire in Louisville in December 2021, and really gaining an understanding of why it's important to understand some of the insurance basics and be able to educate your neighbors and your friends. Because in this day and age, insurance is a lot more little more complicated than it used to be in terms of home insurance, which is why we're bringing you this program tonight. And Lisa is our Roadmap to Preparedness ambassador in your state, bringing our shopping help, but also our risk reduction guidance to communities across the state. and being part of the search for solutions to help restore a competitive market there. We're joined by two different independent insurance agents. An independent agent can sell you a variety of different products from different insurance companies, as opposed to what's called a captive agent, who can only sell you one insurance company's product. Lisa is based in Durango, and she is that rare bird in the agency world that's willing to come on, work with a consumer group, and share her knowledge. So thank you, Lisa. Hopefully we will soon be joined by Sarah Lucero, another independent aide. There she is. Sarah, yay. Okay. Um, Sarah is another independent insurance agent, who can place her clients with a variety of different companies. She's been in the business a long time. Just like Lisa Jensen, she's proactively helping her clients navigate Colorado's property insurance marketplace, and she's been keeping our organization up to speed on issues and developments. So why are we here? Home insurance has become much harder to keep, find, and afford in suburban, rural, and even some urban areas. And I forgot to mention that the slide deck that we are going through tonight is already posted on our website. If you go to uphelp.org, you'll be able to find it under events. So you're welcome to take notes tonight, but please know that you can just put your pen down and have your ears open and absorb the information. And if you missed something, you'll have the opportunity both to watch the recording later or to check out the slide deck. But if you want to pull up the slide deck on your own, you certainly can, but I'm going to be going through it tonight. So why we're here, it's become increasingly common for people to get a non-renewal notice when their current policy expires. And then instead of having multiple insurance companies willing to offer you a quote and competing for your business, you may now find only one or two, and they may be brands you haven't heard of. And when you do find a replacement policy, it may cost as much as 2 or 3 times more than your old policy. You may find that you only have two choices. Insuring your home through a company that you've never heard of, a kind of company that's called surplus lines, non-admitted, or excess. Those are that's insurance lingo for a company that is a little bit outside of the traditional regulated field, or the newly created FAIR Plan, which we are going to be hearing more about as we go through here. So one thing I really want everybody to absorb, if you're thinking about home insurance and shopping, reducing your risk profile, or improving your risk profile, really is what it should say, is key. It's reducing risk, improving your profile. So reducing risk means making it less likely that your home's going to be damaged or destroyed in a disaster. And improving your risk profile is doing those things so that when an insurance company looks at your at your property, at the information that they now have access to about you and your property, that you look like a better than average risk. Right? So reducing risk, improving your risk profile. Those are two things that are a lot more important than they used to be, for keeping your home insured. Why is this happening? There are many new tech tools available to insurance companies that make homes look too risky to them. So risk scoring systems, aerial images of your property from above, mined data, and artificial intelligence. There's also increasingly severe weather events associated with climate change, such as wildfires hitting in late December or January when we don't expect them. And then inflation, which we've been suffering from in this country since COVID, on supplies, materials, labor, and then something called reinsurance, which is the insurance that insurance companies buy for their disaster risk, their high level exposure. And that reinsurance has gotten a lot more expensive in recent years. So this is just to illustrate to you when I talk about tech tools, right? This is just to really help you understand why things have changed so fast. It's not just that insurers are worrying about climate change, it's that they have all these new tools available to them that they didn't used to have that really magnify risk. So this is an ad from one of those tech providers to tell insurance companies why they should use their tools, right? Um, that this tech company combines climate science data with accurate property specific conditions, addressing the critical challenges insurance companies face from wildfire, severe storms, and other risks. And this is the key for you to understand. As a result, our customers, says the tech tool provider, are saving hundreds of millions of dollars annually. You're not their customer. You're not saving the millions of dollars. Their their customers are insurance companies. That's who they're saving money for. So they're telling insurance companies, if you use our risk assessment tools, you're going to make more money because you're going to take better bets. Okay? So it's just important to understand what's happening, right? So these are some of the reasons that your insurer may not offer you a renewal or a new policy. Your home's risk score, your home's claim history, the age of the home, the age or condition of your roof, conditions around your home that they perceive as hazardous. You know, they buy an aerial image and they see that you have a trampoline they didn't know about, or they see that you have a wooden fence that touches your home, or they see that you have a lot of brush around your home that's not been cleared, or they get mine data that shows them that you have knob and tube wiring, old pipes, that kind of thing. Or there may be a business problem. There may be a sales quota imposed on the agency you buy through, where the insurers have said you can only place 2 new policies with us each month. Excuse me. Or the insurer that's been insuring you may have business objectives in terms of the numbers of homes in that area that they feel comfortable insuring. So that would be density. So what do you do if you're dropped or you're non-renewed? Start shopping right away. Get help from an experienced proactive agent, somebody like the 2 people that we've got on the panel today, ideally local in your area. Um, do your best to insure your home for what it would cost to rebuild it from the ground up in compliance with current building codes. In other words, try not to underinsure your home. Even though prices are high, it's trickier. And ask good questions so you know what the limits, caps, exclusions, and what your deductible is. Keep good notes of your conversations with insurance company representatives, and then make those risk reduction home improvements. Update your wiring, your plumbing, install a water sensor, repair or replace your roof, clear vegetation from around your home under decks. We're going to give you a lot more detail on that as we go. So Angie, you want to walk us through what the rules are in Colorado around non-renewals, if you're with us.
Yeah, absolutely. I'm here. Here, let me fix my, sorry, I didn't realize I closed my camera there. So yes, we actually had an update to the notice requirements in Colorado. So now, when a homeowner policy is being non-renewed, the company must provide 60 days notice, and that's an increase of double what they previously were required to provide. They must explain the reasons for why they're denying the renewal. And then we also expect, just like this slide says, consistency. So while we don't make the underwriting guidelines or rules necessarily for the companies, and in most instances, there may be some very specific laws that apply to things, but for the most part, the companies are creating these underwriting guidelines, and so what we really want to see is consistency. That way, there's no consumers that are being negatively affected one way or the other because these rules aren't consistent. Um, and then, the rules are a little bit different if there is a fire. That is something that unfortunately Coloradans do have to worry about. So if there is an immediately designated, wildfire or other catastrophe, then there can be some additional protections layered into either non-renewals, claim activities and expectations. So there have actually been a lot of changes in Colorado, and I would encourage anybody who's interested in really diving in and getting deeper to maybe look for future Division of Insurance town halls, because I know our commissioner is very interested in getting information out there and connecting with consumers as well as the industry to find solutions here. So a lot has changed law-wise, but that's basically in a nutshell.
Yeah.
Yeah.
Thank you. Um, and then if you want to just go over these
Yeah,
resources.
absolutely. So we do have premium comparison guides. It's for both auto and home, but we really have found that a lot of our homeowners take advantage of this more than on the auto side, but it is available for both. And it allows you to look at geographic locations within the state and what carriers are writing in those areas, as well as what the average premiums are. So it's not a guarantee that that carrier will write a policy for you or at the premium that you see on our website, but it's just some general basic information that we try to get out there to help folks maybe start that search for insurance. But also you can't go wrong with getting an agent or a broker to assist you. It's what they are there for. They can look out for your interests, make sure that your property is properly insured, um, especially if you have a custom home or maybe a non-traditional type of property or a lot of buildings. So anyway, that can be helpful. But we also have complaints you can file with our office. So if you feel that your insurance company has not provided you adequate notification, if you for a non-renewal, or a cancellation, anything that you have concerns about, you can absolutely reach out to our office. We're here as a resource. We can't always fix the problem, but at the very least, we can give you information. And then all of our contact information is here. So please, any questions, whether you think it's small, big, silly, not, reach out to us. We're happy to help.
Thank you, Angie.
Yeah.
And I mentioned earlier that there are these companies that you may not have heard of that are called non-admitted or surplus lines or excess. And Angie's department offers, this is just one page. I couldn't get it all on there, but it's a long list. And if you want to see if an insurance company is on that list, there's the email address there for just to know that they're legit in that level. But at the end of the day, my feeling is that if you're going to be going with a surplus lines company, you ought to be working with a really good independent agent or an agent who can vouch for that company, who can, who is has that integrity and to not throw you with any old fly by night type operation. So now because a lot of people are having to go with, and there's some surplus lines. We companies that are financially strong, and this is a new-ish phenomenon of people insuring their homes through this type of company. And there's a tendency for people to kind of be nervous about them, or again, it's just really important to work with a good agent before you go in that direction. But then there's another option for you now in Colorado, which is the Colorado Fair Plan. So Kelly, talk to us. I guess, I don't know, congratulations. I don't know if that's the right word. Maybe is a better word. Thank you for stewarding this challenging lift. And I know there's you're getting a lot of questions, you're getting a lot of concerns. Thank you so much for being with us to walk us through some of the basics.
Well, thank you for including the Colorado Fair Plan in your conversation tonight. Really appreciate it. You're right, Amy, there are a lot of questions. So we want to be able to provide information, but I think the point you just made is such an important point for all consumers, is it's critical that you work with an agent that you trust, that truly understands the marketplace, particularly in the challenging market that we have now, that they understand what admitted carriers may be writing in that area, what options there could be in that excess and surplus lines, that non-admitted market you mentioned, as well as the options that may be available under the Colorado Fair Plan. But it's important to note that the Colorado Fair Plan, it's not for everyone. You do have to be declined by 3 admitted carriers to be eligible for coverage under the Colorado Fair Plan. You must purchase those policies through a licensed agent, so you cannot come directly to the Fair Plan and purchase a policy. Again, underscoring that critical point that it is important to work with that licensed producer. And as you said, Amy, preferably one that's in your area that you know understands some of the dynamics of your area. That can be very helpful in the purchasing process. The Colorado Fair Plan really is intended for those high-risk properties that can't find coverage anywhere else. The Colorado Fair Plan also has very limited coverage. I'm going to show you on our website. We're going to take a little time to walk through the website so you can understand the resources that are available to you as consumers to really help you understand those coverages that are available under our Colorado Fair Plan, and probably more importantly, those coverages that aren't available under a Colorado Fair Plan policy. So again, it is limited coverage options. And so it is really important that you work with that agent to make sure that you really understand those coverages when purchasing a Colorado Fair Plan policy. So now I'm going to go ahead and share my screen and show our website, because we really want this to be kind of that first line of communication for consumers to really help you get to know the Fair Plan. We know that we're a new entity in the market, and so really understanding the nuances of the Fair Plan and our products is really important. So let me go ahead and share the screen. All right. Hopefully you can see that.
Yep, very good.
Great. Great. So here's our homepage. We just have very basic information on our homepage. We do have a little running video that gives a very good general overview. It's just a couple of minutes, but that helps kind of give some highlights about the Colorado Fair Plan. Again, just talking again that we are last resort coverage. We're not going to be the best coverage available to you, but if you need coverage, we will be available. So just kind of who the Fair Plan is for, talking a little bit about Fair Plan cost and coverage. I know, Amy, you've touched on just how expensive homeowners insurance is getting. The Fair Plan is not intended to be your necessarily an affordable option for you. The cost of a Fair Plan policy does represent the high risk nature of the properties it insures, so it may not even be the most affordable option for you. So, but we do have some tools available to agents. We do have a price indication option, so you don't have to go through the full application process. If you just want to have an understanding of what a Fair Plan policy could cost, that is a tool that agents can use to help guide you through that process. So we do understand that cost is top of mind for many consumers, but we do want to be very upfront and underscore the fact that the Fair Plan may not be the most affordable option for you. So that's just some basic information that's available on our homepage. But for consumers specifically, we do have this consumer resource page. So I do want to briefly step through that. First and foremost is eligibility. As I mentioned previously, you do have to have declinations from 3 admitted carriers to be eligible for the Fair Plan. So that's kind of the first point, is to make sure that you really have shopped that standard admitted regulated market to make sure that you really can't find coverage. So that's your first stop. If you do qualify, then really that next piece is to make sure that you understand kind of the basics of a Fair Plan policy. Again, it's basic property insurance. It does have a $750,000 limit for homeowners and a $5 million limit for commercial. It does have limited coverage. There's some coverage for wind and hail, but there are some key exclusions that folks need to be aware of. There is not coverage for liability, theft, and water. Those are usually 3 biggies that are on your standard homeowners insurance policy. Also, something that's not included in a Fair Plan policy is replacement cost coverage. So along with that, you don't have something called extended replacement cost that kind of helps buffer if you're rebuilding, particularly after a catastrophe, where you may have higher costs due to higher demand. So that extended replacement cost, that law and ordinance coverage that also helps you rebuild your home, those are not included. In addition, there is not additional living expenses coverage. So if you're not able to be in your home to help provide those living expenses, those are all coverage that is available on that standard homeowner homeowner's policy, but that is not available on a fair plan policy. We are what's known as an actual cash value policy. How actual cash value is calculated is we do determine what the replacement cost is, and then it's less the depreciation, which is the age of the home and the condition of the home. So the actual cash value of the home is less than the replacement cost. So it is important that folks understand that. And yet again, why it's so important that you work with that licensed agent so that they can help walk you through that, because it is a very complex process and something that's different than your standard homeowner's insurance policy. So you really want to make sure that you understand the coverage on a fair plan policy. Also here, once you've determined your eligibility, you're working with an agent, we do have a search tool for locating an agent. I'm going to go to that search tool through a different link on the website, but you can get to it right here. Also, again, kind of these important reminders about what a fair plan policy is, and importantly, what a fair plan policy isn't. Also reminds you to check those other options. Just as Amy mentioned, look at those other market options. As she noted, it is fairly new to have residential properties in particular insured in that excess and surplus lines market. That was typically more of a commercial space, but across the country and here in Colorado, we're seeing that excess and surplus lines market grow, particularly for residential properties. So make sure you do explore those other options. Also here, just as Angie mentioned, the homeowners toolkit on the DOI website, it's an excellent toolkit. We have also linked to it here on our website. So I do want to go back to this agent search. Obviously, you can get to it here. You can also get to it by going, again, up to this your consumer page, and you can go to agent search. So here is that find an agent tool. We do have a lot of agents that are currently registered to write in the FAIR Plan. Any licensed producer can write in the FAIR Plan. You just have to go through a registration process. The FAIR Plan does not appoint agents. So we do have a number of agents that are registered. You can search a couple of different ways on this tool. You can search by region. So again, if you're kind of in Eastern Colorado, we have some licensed agents out here. If you're in the Front Range, obviously we have more here. So you can search by region. If you don't know of an agent, but again, want someone close to you, you have other ways you can search. You can search if you happen to know the name of an agent. So Lisa, I'm going to go ahead and use your name to show that. So you'll hear from Lisa in a little bit, but you can see here that Lisa is also registered with the FAIR Plan. So this is a way you can get Lisa's contact information. So that is our agent finder tool. And then we also have some other educational resources that are available. So again, here you can link to that agent locator tool, but we also have some really important policy resources for you as well. So here we have a policy comparison guide. So this is really, again, because the FAIR Plan policy has some different coverages than what most homeowners are used to in a standard homeowners insurance policy, we have built this little resource guide for you. So to show, what a standard market policy has and what a Colorado FAIR Plan policy has. And so here you can see coverage is replacement cost. Here with the Colorado FAIR Plan policy, it's limited to actual cash value. Here, policy limits, it can vary depending upon the value of the property. Here we have very defined limits in statute of $750,000 and $5 million. We also show here, again, liability coverage is included in your standard homeowners policy, not included in your Colorado FAIR Plan policy. So hopefully this is a fairly easy reference chart that you all can use just to help make sure that you understand a Colorado FAIR Plan policy. If you are applying with the Colorado FAIR Plan, it is possible we will request an inspection of your property. We are trying to use a self-inspection tool where you can use a smartphone and be able to go around and do the inspection yourself. But we do have an FAQ about that inspection process to help you understand. I think it's really important for people to understand, because I think they get very nervous about an inspection because they're concerned that that's going to mean that they won't qualify for coverage, that their property won't meet our underwriting guidelines at the FAIR Plan. I will tell you, the FAIR Plan does have some very limited underwriting guidelines. So if the house is uninhabitable, if the roof is caving in, something like that, then it would be considered uninsurable. But we do understand our role of taking those high risk properties. So our underwriting guidelines are much more limited than what you're going to see on the standard market. So really, the key purpose of the inspection is to really understand the property, more so than to determine whether or not the property qualifies. So just to help give a little bit more background on the inspection process. Also, we understand that folks want to be able to read their policy. They want to be able to see, while the reference chart is nice, they want to be able to see the actual policy language. So we do have a sample basic form available on our website. So if you are inclined, if you want some really interesting nighttime reading, we do have the policy form available for you right here on the website. We do also have a commercial policy, and we will begin taking those applications soon. Also, obviously, wildfire mitigation is top of mind for so many people. So we have borrowed some good mitigation resources here. This happens to be from Wildfire Partners out of Boulder County, but they do have some great resources. And so we've shared that on our website, particularly as we really, as we were launching in kind of the springtime, and a lot of people were looking to do a lot of that kind of decluttering and vegetation mitigation. So those are some of the resources that are available. Finally, just wanted to mention, if you are a Colorado Fair Plan customer, you can pay your premium right here from the website. So we wanted to make that as simple as possible. So with that, Amy, I just wanted to give that overview of the website, the resources that are available to consumers, to make sure that they have some assistance in understanding a fair plan. But again, I think one of the key messages is to make sure you work with an agent that really understands your needs, your areas, and the marketplace. So I will turn it back over to you to get some of that good expert advice.
Thank you so much, Kelly. I have two quick questions. One is the three declinations.
Mhm.
Do they have to be in a particular form? I mean, how do you, what is it? Is it like a piece of paper? What is it?
So those declinations, they do need to be within 45 days of submitting an application. So we want to make sure that those declinations are that you've recently searched the marketplace,
Right.
so that those aren't old declinations. But they can really be in any format. It's just on the application. We will ask for information about when the declination happened and essentially the nature of the declination. So it could have been your non-renewal notice. It could have just been, a reason you could have gotten it, over the phone or something for wildfire score. We just ask you to explain what it is, but we don't necessarily need it in a specific format. We'll just need a few specific details about the declination.
Okay, got it. And then the other question, so in California, our market has been troubled for much
Mhm.
longer than yours. So we've had lots of opportunities to experiment with things, and also we've seen some entrepreneurial activity with insurers offering policies that supplement what the California Fair Plan covers. They call those difference in condition policies, DICs. Are you seeing any popping up in Colorado? We expect that they will. Are they coming on the market yet?
So I can say we are aware of a couple of DIC products that are out there. It's not nearly as expansive as it is in California. As you say, California has been, navigating this space for longer than we have here in Colorado. You also have a little bit of that kind of chicken and egg when you have enough policyholders to create a marketplace, to create a product. That's when you start to see more product available. So, certainly as a result, California does have more of those DIC products available. But we are aware of a couple of them here in Colorado, but it is really important that you work with that agent, because even of the couple of products that I know, they do work differently. So not all DIC products are created equally. They're going to provide you different coverages. So again, I keep underscoring your key point, Amy, is work with that trusted agent who really understands all of those nuances and unique dynamics.
Thank you. All right, so we'll get back to the deck here. Let's see. All right. So we already covered this. Kelly walked us through what's not covered. So, you heard the honest, straight scoop that home insurance is getting more expensive. And so what are some of the affordability strategies that you can use? Certainly in the traditional market, you want to find out what discounts are available, ask for those you qualify for, bundling your home and auto with one insurer, emphasizing again about working with somebody who's proactive on your behalf, raising your deductible, understanding that it's really better not to file small claims because one of the things that insurers look at is what's your history if and having a lot of claims on your record is not helpful to be able to hold on to your insurance. So, saving your insurance for the really big things is kind of the how we are guiding consumers today. Reducing and eliminating buckets of coverage you can live without, such as high dollar limits on your personal property, or getting rid of other structures coverage if your insurer allows you to decouple that, and if you don't have a freestanding garage or barn or outbuilding. Mitigating is so important today, and my colleague Lisa will be talking a little bit more about that. And then, of course, giving your insurer proof of improvements that you make, photos and invoices and that kind of thing. All right. Agents and brokers can help you find things you won't be able to find on your own. You heard you can't even go directly to the FAIR Plan. Most of the surplus lines companies, you can't go to them. You wouldn't even find them without an agent. And then really helping you strategize, which is where we are right now. So your risk score has become a big deal. In California, we've got a rule now that was kind of a hard fought rule that your insurer has to tell you what your risk score is. Now there are different risk score programs that different insurers are using, but so you don't have this law yet in Colorado. I predict you probably will at some point. But you can certainly ask your insurance company, are you using a risk scoring program, and what is my risk score? They are having a bigger and bigger impact on your options, what your score is, but it is very hard to find out what your score is or to improve it. We are advancing a model law that would at least try to give you some protection with regard to an insurance company's use of aerial images, which is another reason a lot of people are getting dropped, is that we are pushing a bill that would say that you would have the right to get those images and get some time to fix whatever the problems are. And then if you provide the insurer with proof that you fixed those problems, that they would offer you a renewal. But that is just in the very early stages, and it's not law yet. So I'm going to turn it over now to Lisa Hughes to talk to you a little bit about what you can do. I talked to you about what you can't, it's very hard to change your risk score. It's very hard. You can't force an insurance company to take you as a client if a customer, keep you if they don't want you. What can you do? And one of the most important things that you can do is improve the conditions around your home to make it less likely that it would be damaged or destroyed in an extreme weather event. So Lisa, thank you so much for being with us and sharing your.
Sure, thanks. So yeah, we've talked about what you can't do. So some things you can do are at a community-wide level. And this can help you also because we are hearing that insurance companies are going to be moving more and more toward community mitigation and wanting to insure, groups of communities that have done that work. So you could consider getting a FireWise designation. My community just did that. So you can reach out to me if you have questions about what that process is. But it's not a very difficult process, but it can help you. We're hoping in the future, possibly maybe get some insurance discounts. Your fire departments, nonprofits, and public agencies offer lots of resources. And if you can, try to volunteer to help your community get widespread risk reduction by participating in FireWise or some other the wildfire partners if you're in Boulder County, etc. So this is just some pictures, but you want to try to create defensible space, harden your house, do what you can with vents, gutters, a class A roof. If you have that, you can also, if it's hail impact resistant, you, I believe, can get a discount already in Colorado for that. Just things of that nature that will help you improve your house and its chances of surviving a disaster or a wildfire in particular. So there's, where can you go to get help in Colorado? Well, you can go to Fire Adapted Colorado. Wildfire Partners if you're in Boulder or Larimer. And on the next slide, I've got a whole list of places around the state you can go. Getting a home assessment is a great idea. And there's county, local, and regional programs that do that, including fire departments and other places. So doing that is a great idea because they'll tell you what you can try to fix. That will help to decrease your risk and your potentially your risk score, as Amy was talking about before. I wanted to mention some new legislation that just got passed this year, HB 251182. It will go into effect next year, but it's basically a transparency bill that will require insurance companies to say if they are offering discounts for mitigation, what they are, what you would need to do to get them, and that type of thing. So we're hoping that that will be helpful to everyone and consumers in terms of keeping insurance, but also knowing what you can do to help you maybe reduce your cost as well. These are just some other things you can do. Try to not plant anything in 5 feet, use tempered glass for windows, cut your tree limbs if they're close to your house. I won't go over all of these, but these are from Fire Adapted Colorado, but there are many lists like this out there on the web.
Okay.
So this is a list I just recently compiled. I know we have people from all over the state on the call. So these are some places that you can go or reach out to if you do want an assessment or help. A lot of these places are also offering rebates for doing this type of work. So just to briefly, I'll highlight a few wildfire partners in Boulder and Larimer counties. Eagle County has Real Fire. If you're out in west / middle of Colorado or western Colorado, my wildfire risk, and you can access that through the West Region Wildfire Council. Estes Valley Wildfire Adapted Partnership is down in Southwest Colorado, Vail, etc. So there's a lot of places across the state. You can also check with your local fire department, as more and more of them are starting to help with this kind of thing too. So I would encourage you to reach out to any of these that might apply to you, and see what you can do and what's available. Some of them have trainings, partnerships. I forgot to include Grand County on here. Grand County also has a program. But there are many all over the state.
Great.
This is just a little about Wildfire Partners. They were the original one who did it. They do a lot of different things. And they have helped create some of the other programs in the state that I mentioned as well.
So you
So
can
if you're in Boulder County, reach out to them.
you can contact Wildfire Partners if you are in Boulder County.
Correct.
And see if you can get on their list to have your home assessed and or improved. So
If you're in certain parts of the county, that is correct.
okay.
Yes, if you reside in a municipality in Boulder County, check with them first.
Okay.
So,
All right. So thank you, Lisa. So, we are, in our, at our core, United Policyholders helps people recover from disasters and get all of their insurance, value from their insurance. So we are here to tell you, if you're thinking about going bare, if you've paid off your mortgage, and you just cannot believe the sticker shock of what the quotes that you're getting, we're here to remind you from 34 years in the trenches that insurance is worth it, even if you don't have a lender requiring it, because really it's insurance money, not charitable or government aid. That's the #1 source of money that helps people rebuild and recover after disasters. FEMA, hoping FEMA sticks around, incredibly important. But their grants are needs-based, and the maximum has been $42,000. The average grant is about $5K, not enough to put a house back. SBA loans are very wonderful. Also hope that will continue to be available. Those are low interest, but they have to be repaid. And charitable aid covers basic needs, but really, it's insurance. That's the number one tool. So we already talked about there's 4 types of insurance companies. Admitted, that would be the companies you know, State Farm, Farmers, AmFam. The non-admitted surplus and excess, we'll name a few of those in a minute. The government sponsored, that would be your Colorado Fair Plan, your National Flood Insurance Program, and then what's called forced or lender placed. So you have a mortgage, your insurance company says they're not going to renew, your policy lapses, you haven't provided your mortgage company with proof that you have replacement insurance, they're going to slap a policy on you and you're going to pay for it. They're going to add that cost to your debt. So we really encourage people not to go that route. Because not only does a forced or lender placed policy really only protect the lender, it just protects the amount of the loan, but it's expensive for what you get. These are just some of the admitted license. Those are the ones you want to be with if you can. The traditional names, they participate in Colorado's Insurance Guarantee Association. So if they run out of funds, you're protected up to 300K. Their rates and their policy forms are regulated by the agency that Angie works for. They have not nearly as much oversight over the surplus lines companies. So that's why it's more important that you really work with a trustworthy agent if you're going to go with one of these excess companies, because it's the most important thing is that they're going to be strong and have the dough after a disaster to be able to meet their obligations and pay all the claims that come in. When it comes to keeping your home insured and the quality of the coverage, a reminder, you want to go with replacement coverage if you can over ACV. That's why Kelly emphasized that what you can get through the FAIR Plan is not the ideal. It's not going to replace what you had. It's going to be the sort of what we often call sort of the Craigslist price. It's the used price. It's depreciated, right? Extended replacement cost coverage if you can. Building code compliance, very important. Adequate coverage for your home per square foot. And then if your agent recommends that you get the full 2 years of ALE coverage, you buy it. We say buy it. Then if you have special items, art, jewelry, collections, they're probably either excluded or capped.
In the state.
Buy extra coverage there. And then just have a basic understanding. Flood damage is excluded from a home policy and from a FAIR Plan policy. Earthquake, same thing. Mold, probably. Earth movement, probably. So just know, where those holes are and then really understand your deductible. Because we're at our core so involved in helping people recover from wildfires, and so many people are underinsured, 2/3 find themselves without enough coverage on their dwelling, even though prices are high now and it's really hard. It's if you're paying for the insurance, it's worth paying a little extra to have adequate coverage on your dwelling. Okay. These are just some questions that we recommend asking, but we want to get to the questions so our agents get to weigh in. So I'm going to start with Sarah Lucero. What coverages do you believe are most important to have in place? Where should people not trim to save money, and what discounts are currently available?
Hello, thank you for having me on.
Sorry you had to wait so long for your turn.
Coverages definitely on your home that are most important is making sure that we have your home properly insured by way of us as agents completing a replacement cost guide estimator. Every insurance company has their own cost per square foot or their own replacement cost guide estimator. Some do vary a lot. So it's really important that we have all the information about your home, especially updates to the property. So again, dwelling coverage, obviously most important, but even that extended replacement cost, again, every insurance company is different. So you want to make sure that you've got at least 20-25%, but in most cases with the carriers that I represent, we have either guaranteed or uncapped limit, which means in the event of a total loss, the insurance company is going to rebuild your home regardless of the insured amount, which is the best coverage you can have. You can get 50% or an additional 100% extended. And what that means is if we have your home insured at 500,000 and you've got 50% extended, that means in the event of a total loss, the insurance company will pay up to an additional 250,000. If you've got 100%, they'll pay up to an additional 500,000, which would be 1 million. So those are definitely coverages that I recommend on every policy. A lot of companies now are also coming out with service line coverage, especially on the older homes that might still have those clay pipes. If you're in Denver or Boulder area, you might be in one of those older homes. A lot of the companies out there offer service line coverage, which is any utility that's coming into the home. That's also an important coverage to have. Anything that comes within your homeowner's policy, make sure we have enough coverage for your contents. Again, any detached structures, in most cases, detached structures are only on an ACV basis with most carriers. Some will give you extended, some actually give you more. And let's see here, water and sewer backup. Water and sewer backup is damage that's caused by your sewer line backing up into your home and causing damage to your drywall, your flooring, any personal property. Those are all important coverages. Those are the ones obviously that I would not trim coverage on, but things you can trim coverage on are maybe identity theft. A lot of people have that on their credit cards. I would not recommend putting that on a homeowner's policy, even though the cost isn't a lot, it still counts as a loss. Equipment breakdown might be something that you don't have to have. Equipment breakdown covers all the appliances and mechanics of your home, like your AC unit and furnace. Those might be something that maybe you don't have to have. The cost, again, is very minimal, but if you're turning in claims for those things can count against you. Discounts that are currently available. Obviously bundling, that's what all insurance companies are wanting people to do right now is bundle. I will tell you, if I have to put your home with excess and surplus lines, I'm going to want your auto, even though your auto won't go with excess and surplus lines. It's, the application process is very long. The turnaround time is very long. It's just a lot of paperwork if we have to put you excess and surplus lines. So I'm going to ask for your auto in most cases. But other discounts, hail resistive, UL4 hail resistant roof. If you've had a roof replaced recently, contact your agent, make sure that they know that your roof is updated, because the claim side never talks to the agency side. They never talk to each other to say, you've got a new roof. That is on you as an insured to let your agent know you have a new roof. That also gives you great discounts. Let's see here.
Oh, that's good. That's good. That's good. That's good. Thank you, Lisa. And I hear this all the time from agents that it just takes them so much longer now to put a policy in place for a client, and that's tough all around. So Lisa, how does bundling does bundling help? We heard Sarah say that she needs it, but does it help you with an insurer?
Well, it definitely gives, if we can bundle, and you can get, that means getting the same carrier for your home and auto. So definitely you get a discount on both of them. It depends a lot on the carrier, but typically, honestly, I'm trying to come up with numbers because it's been a long time since I've been able to do that, because we haven't been able to place a lot of homeowners insurance in the standard market in the last couple of years. But you'll probably get anywhere from, I don't know, 10 to 20% or even more discount on the homeowner premium, and similar, maybe less than that on the auto, but it's definitely worth it. And then some companies, there's a convenience because you'll have everything packaged together. You can get one bill for everything. So that definitely helps. And then kind of what Sarah said, even if we can't place the home with standard insurance, we're in the surplus lines market, if you at least have all of your business or as much as possible with one agent, they're going to be able to keep a better eye on all your stuff. I can't believe how many customers I've had who find out after 3 years that they've been paying for 3 different auto policies, and they didn't know why they're paying State Farm for this one and us for that one. and another one, and they've been, you know, thousands and thousands of dollars. And I don't know, because I don't know if they have a State Farm policy. So if you have it all either with the same company or at least with the same agent, we can keep an eye on your stuff and maybe notice stuff that might be missing or stuff that's doubled up, things like that.
Okay. So, one more for you, Lisa. Will it help me keep my insurance if I add an umbrella?
I don't know that it would help you keep your insurance, but it's extra coverage. And again, this would be if you qualify. So if you have your home and auto bundled with one carrier, then you know, agents should offer an umbrella policy, which gives you more liability policy. So it's just extra coverage. It doesn't give you extra dwelling coverage in the event of a loss, but it's more liability if something happens. So we're sort of advised to offer an umbrella to everybody just so they have that option. And they're typically, if it's all packaged, they're not that expensive for, say, a $1 million umbrella. The other thing I just wanted to mention too that sort of come up is that flood insurance is excluded from your typical homeowner policy and the FAIR plan. And a lot of people, again, we're supposed to offer flood insurance to everybody. And a lot of people live in places where, you know, we're in the mountains, we're nowhere near a river or anything like that. But landslide, mudslide is also something that's considered in the definition of flood. So for example, we had a fire here, the 416 fire outside Durango in 2018, I think. And it was in the mountains. They didn't lose any structures. But then shortly after that, we got our typical monsoon season with a lot of rain. And I have had this happen to friends in other mountain areas where the trees are all gone now because of the fire. And then the rain comes and then the mud is washing down the mountainside. Now that's a danger to homes. And if it's happening, you can't get a flood policy because there's a waiting period. So if you had it already, then again, if you're not in a high risk flood area, it may not cost very much. So it's something else to consider.
Yeah, well, you know, after after there were I guess it was there was the I'm gonna say there was a Black Forest fire followed by the flooding in Manitou. Is that which I don't remember which wildfire, then there was flooding. And there was a huge push, and we were part of it to try to really raise awareness about the importance of buying flood insurance. So I mean, Lisa, and Sarah, I mean, do you regularly recommend to pretty much all your all your customers that they consider flood? I see head nodding.
Yes,
Yeah.
it's very, it's pretty inexpensive, and we can even, Lisa, I don't know if you do it, but I do a lot of private flood for people that aren't even in flood zones. They can get private flood, and it's super inexpensive.
Okay. So especially when you're not in a, right, if you're in a, yeah, if you're in a low risk area. Kelly, the FAIR plan doesn't offer any discounts yet, right? You haven't been mandated in that direction.
That's correct. Yeah, we do not have discounts at this time.
I mean, you know, again, California, I sometimes it's like a sandpaper thing. If you say the word California to people in Colorado, we don't want to hear about California. But the first mandatory discounts, it seemed like the FAIR plan got, you know, because it's a state supported program, there's a lot of pressure on the FAIR plan, you know, to offer discounts. But obviously you're just trying to get on your feet right now and all that. So no discounts. What about options? You know, are there not a whole lot of options that you're offering, correct?
I mean, it depends on options. So you can just purchase your basic fire policy with the FAIR plan, and then you can choose to purchase extended coverages. So that's your wind and hail. So particularly in Colorado, that's critical, a little different than California. They don't have quite as much wind and hail exposure there. But in Colorado, you can purchase those extended coverages. You can also purchase malicious mischief and vandalism as some additional coverages or some additional causes of loss. We do also have a number of deductible options that you can choose from as well. So that's kind of similar to a standard carrier. So your options are limited, but you do have some options. So really, you know, if where you are, you don't have a lot of wind and hail exposure, but you do have that high fire risk, then you may want to look at a fire only policy. Again, depending upon your individual coverage needs and you know, the availability for your individual property.
Okay. Angie, if you're still with us, can you just give us the basics on what oversight your agency has over these surplus lines insurers?
Yeah, of course. I'm definitely still here. Unfortunately, it is very limited. Most of the oversight with the surplus lines insurers is really with their filings. So and even there, they don't have to file rates with our uh, with our agency. We would still expect them to follow 1104, which is our fair claim handling statute. Again, they're not really held to it, but we still have that expectation that even though it may not be black and white, that statute applies. We still expect, the same level of claim service, with a surplus lines carrier with an admitted carrier. So, unfortunately, there really aren't a lot of laws, even with the notice requirements for non-renewals. They're not held to those. So if you have questions, if you have a surplus lines carrier, it's currently insuring you, and you have questions about an experience you've had or something you've been told, please call our office. Because a lot of times with surplus lines, it's case by case, and we're happy to answer those questions.
Thank you so much.
Yeah.
Lisa Jensen, if your choice is between the FAIR plan, obviously new, so this might be a tricky one for you to answer, and a surplus lines insurer, what factors should I consider as a consumer?
I think, well, consumers are probably going to look at the price first, but I think the first thing is just what you're actually getting. So we talked a lot about replacement cost. You're not going to get that with the FAIR plan. So for example, I haven't written any yet, but I've done a few quotes, and I might have there's that $750,000 cap. So if you had a home that might be worth $750,000, the ACV on it, depending how old it is and so on, might be, I don't know, 350 or, anywhere from a little more or a little less than that. So you're not going to get that full replacement cost coverage. I have done some quotes for, I think I did one for like a $3 million home. And of course, it's only going to be insured up to $750,000. So if you have a mortgage, your mortgage company isn't going to go for that. And if you don't have a mortgage, you should look at, have customers that say, well, I'll just self-insure. It's like, okay, you have a $3 million house. I don't have $3 million in my back pocket. If you do, great. But so that's the biggest factor, I think, is what you're actually getting. And the other huge thing, I think, is liability. I would never want to have homeowners coverage that didn't have liability insurance. I haven't seen very many homeowner liability claims, but when they happen, they're horrible. So, and that's the kind of dollars that people don't usually have to pay out. They might be able to afford 10,000, 20,000, maybe even more for some property damage, but liability is usually more. So I recommend, I really say, as it's called, it's insurer of last resort. So if I have an option between a surplus lines and a FAIR plan, I'm going to kind of recommend the surplus lines. I suppose, given what Angie just said about the regulation and stuff like that, that might be a factor. The FAIR plan being more of a sort of under the government, or I don't know if it's actually a government plan, honestly. I could say that, but if it has more regulation, that might be a factor. But it's going to be very, very limited coverage and not a lot of options to add in. The surplus lines you can usually add in. It'll cost more, but you can usually add in all the other things you might want, or most of them.
Yeah. Okay, thank you. So Sarah, I've not gotten an agent to say yes to this question, so I'll ask you anyway. Is there anything I can do to improve my risk score if I'm a consumer?
If you're talking about like the risk score of your property, yes, obviously. Mitigating your property, making sure there's not trees close by, making sure trees are trimmed up 6 feet from the trunk, from the bottom, the base of the tree, and making sure there's no trees overhanging. Now insurance companies are doing these aerial view pre-underwriting, and they're doing this on renewals as well. If they see overhanging trees touching the home or even close to touching the home, they are non-renewing people. I'm seeing that a lot more frequently now than I have in the past. So
So limbing up
making sure
Incredible.
it's all cleaned up.
Yep. Sorry, I didn't mean to talk over you.
Oh, you're fine.
Yeah. Okay. Lisa, how can my community become a Firewise community? I know
Sorry.
you.
I'm coming. You can become a Firewise community by going to the National Firewise, NFPA, which is the National Fire Protection Association website. I believe it's firewise.org, and they have all the steps on there to do. If you live in Boulder County, you can go through Wildfire Partners. They have a community mitigation program that they've been doing that will sort of give you the preliminary steps you need that you can then submit to become a Firewise community. There may be some of the other agencies I mentioned before may also be doing that. They can help you with those preliminary steps. But that's basically what you do. You need a committee of people, and then you come up with a 3-year plan of what you're going to do. And there's various different choices depending on, your type of community, if you have vegetation or not, or it can be education. There's all different kinds of choices, and you do it every year. And then you get a certain number of hours based on the number of houses in your community or a volunteer dollar amount. And then that renews your certification every year. And then I think every 3 years you have to redo the process. So it definitely is kind of a lot for one person, but if you have a committee, it's not too difficult.
No, I think it's a lot easier than getting the community rating designation for flood, but I know it is. How long did it take your community to get the Firewise designation?
I'm trying to remember. Well, we went through Wildfire Partners and we were sort of the guinea pig community, so I think it's been straightened out more now, but I would say between doing that all the way through getting certified, it was probably 3 or 4 months.
Not
And
bad.
then longest part is after you submit your application to Firewise and then waiting for them to approve it and send you the stuff. Because in Colorado, I don't think they have this in California, but in Colorado, there's at least currently, it may change. There's a step where the Colorado State Forest Service has to approve your application first after you apply and before it goes to National Firewise. So that step can take a little while. So
Thank you. So I mean, it's really important to try to be in a Firewise community today if you are in a rural or suburban or WUI area, because some of the tech companies, Verisk, which is one of the tech companies that a lot of insurers are using, they are every 6 months, and it's actually probably going to get more frequent. They are sucking up data from the Firewise program, so it matters to the tech vendors that we talked about earlier. It matters whether your community is Firewise. Sarah, what can I do to become more attractive to insurance companies?
First and foremost, probably claims history, having no claims, no home claims, that always looks attractive to an insurance company. Taking higher deductibles, that also gives you discounts. Obviously bundling business. Trying to think of what else.
Pay your bills.
Yeah, pay your bills, have a good insurance score.
Chime in. Yeah.
An insurance score is kind of like your credit score, but it's more based around how what your insurance history looks like. So if you have 0 paid out claims that are sitting on your CLUE report, those can hurt you.
So the CLUE report is it's the equivalent of your credit report, but it only relates to insurance. And you can go to the website and you can put in the search box CLUE, and it'll tell you how you can order and get a free copy of your CLUE report and try to make corrections if there's some mistakes that are putting you in a higher risk category than you should be. Lisa, any additional thoughts on what a consumer can do to become have more choices and and be more attractive to an insurance company?
Not really, just the one I added about, make sure you have a good payment history, because some companies, they're not going to rewrite you if you've had a bad payment history. You let your policy cancel or lapse, you're not going to be eligible, or they're not going to. And I've also seen companies where we've had a lot of changes down here, so eligibility guidelines have changed. And I had a couple customers a couple years ago that had sort of hard to place stuff. They had the same policy for 10 years or more and through different circumstances happened to miss one bill and they got canceled and the company would not reinstate them. And then they said, you have to rewrite it. But then they had new guidelines and they were following the new guidelines. So we couldn't rewrite it. So, and it's honestly for me as an agent, I'm just so tired of reminding people to pay their premiums. I mean, I don't feel that should be my job. I do it because it's a lot easier to get stuff, prevent it from canceling than to try to rewrite it or remarket it. But, you know, and the other thing I guess is just be honest about, you know, what you have, what you're, you know, if you have claims, they're going to show up on that clue report, whether you tell people or not. If you have, you know, whatever the type of home you have, just be honest about it. If you have a good agent, they're going to know how to represent it best to the carriers and help you rather than the agent being surprised. You know, it's kind of like having an attorney and you don't tell them, oh, I forgot to tell you I did this or I didn't tell you I did that. So the more you tell them, the more they can, the better able they are to help you with that information.
Understood. It's just gotten a lot harder to hide the flaws in your property now because of all the, you know, the aerial images and all that. So, and so this question really, this came out of California a little bit because, so if my agent tells me my only option is the FAIR plan, which is probably not going to be happening in Colorado for a while, but, should I try another agent? And the reason I kept this question in here is that you know, each agent has relationships with specific insurers, right? So if you're an independent agent, that doesn't mean that you can place a client with any insurer that's got a license to do business, right? So so that means that they're going to either put you with one of the companies that they have a relationship with, or if they can't, then but they don't want to lose your business, then they will put you with the FAIR plan, even though there might be a better option. Now, neither of the independent agents that I have invited to be on our panel would do that. But when we were talking and prepping for today, I talked, Lisa, specifically, we talked about this of, I was very impressed with what you said, that if you can't place one of your clients with an admitted company, that your next step would be to refer them to one of your colleagues who writes for who's a captive agent, right? Can you talk a little bit about that?
Yeah, so kind of along with that too is I think when you're shopping for insurance, you should if you go to an independent agent or anybody, let them know that you're shopping around. I usually remember to ask people, but sometimes I forget and then I go to quote and find out, oh, you know, they already submitted a quote for this. And then it's like, oh yeah, I've been calling 5 other agents and I'll tell them and I just get blocked. So it's not, you know, I think it's changing a little bit, but people have this idea of we're competitors and they want to get the best deal, so they should shop around. But it's like you're just kind of wasting everybody's time. And I don't say that exactly to the customer, but you're not really helping anybody by doing that. And if I get declined by most of the standard carriers I have, there are some other independent agents that might have other markets I don't. And then there's also the captive agents. And, you know, we have a pretty good relationship with a couple of them. They've been referring people to us when they can't write it, and I'll refer them. If you can get a quote from State Farm, for example, or whoever else, it's going to be better than a better rate and probably a better premium than, you know, whatever I can get through the surplus market, and definitely better than the FAIR plan. But then, you know, the other thing is like I go through a lot with customers and I'm almost surprised at how many people don't know very much. And this comes down to even basic car insurance questions. And I'm like, you should be talking to the agent you want to work with and asking them these questions, not having me answer all your questions and then going down the road to somebody else to get a cheaper deal. So, anyway,
Yeah.
but yeah, I think if you're told the FAIR plan is your only option, it's probably worth asking around. Short
Yeah.
answer.
Yeah. And this, you know, Sarah, like this question flows from the last one, right? So we heard Lisa say that if you have two agents shopping, that then they both put a proposal in for you, they're going to get locked out. So that's not really the way to go. So is there a downside to working with more than one agent?
The downside is basically just that. Now, Lisa and I might not work with the same excess and surplus lines carriers, but I mean, we probably work with some of the bigger ones, Burns and Wilcox, RPS. And that's when those quotes can get blocked. If you're speaking with various brokers, it's really not in your best interest. Pick a broker that you trust, that you want to work with, that's responsive, and work with just that broker. And just like Lisa said, if she's got she might have carriers I don't have, and I might have carriers that she doesn't have. So it is good. I mean, it's okay to talk to multiple brokers, but when we're talking excess and surplus lines, it ends up blocking the market. And again, the application process is time consuming. It's very
Yeah.
time consuming.
And you're not going to get a better price from one agent than you get from another unless they're quoting you less coverage, basically.
Correct. That's the big difference when you get two different quotes from two different excess and surplus lines companies. It just depends on how you're putting that information to them and what kind of coverages you're asking for.
Yeah.
But
And-
yeah, they're all pretty much the same. They're all using the excess and surplus lines carriers are pretty much using the same companies as well.
Yeah. Well, okay, so I am trying to rush us along here as I was hoping to wrap it up in about now, but I want to make sure we just have a few more things I want to get through, and I really appreciate everybody's continued attention and participation. So Lisa, I was going to ask you this question. You went through the Marshall Fire. What is code upgrade coverage, and should I buy it?
Oh, me. Sorry, I wasn't sure. I thought you meant me, Lisa, but I wasn't positive. There's two of us. Yeah, well, I am not an agent, so I want to specify that first. So if Sarah or Lisa J wants to jump in, feel free. But my opinion is yes, you should absolutely buy code upgrade coverage. I have it. It's not that expensive, and it's definitely worth it. Just as an example, my house was 30 years old at the time of the fire, and then I had to rebuild to the codes that were in effect when I rebuilt. So basically 2021, 22, and 30 years of code upgrades is a lot. So I would recommend buying it. I think Sarah or Lisa mentioned earlier there are various levels. But in Colorado, it used to only be 10% for code upgrade coverage, but now, thanks to some law changes, they have to offer you up to 20%. So that can really make a difference, sorry, in your ability to rebuild and to be able to get those code upgrades paid for, because they will be expensive, especially if your house is on the older side.
Yep.
Yeah, so as long as people know what that means, it's like if you built your house 20 years ago. or
Yeah, sorry,
something,
I forgot to say.
It's okay. And the building codes have changed in that time as they have, then the building department is going to require you to build according to the new codes, if it's, significant enough. So it could cost more. The other thing, and Sarah, anybody else jump in, I know that the state just passed a wildfire resiliency building code that's kind of in the process. I think it's at the point now where it's working through the counties having to adopt it and the different municipalities and so on, and then it will be in effect next year. And from what I understand of it, it's going to make things cost a lot more to build. They should be more wildfire resilient, but it's thicker wall, stouter foundations, all that kind of stuff. So that would affect people a lot, I think, too.
Yeah. So the bottom line is, again, understanding we're a consumer advocacy organization. It's painful for us to have to say, don't file claims, don't use the product you're paying for. It's painful for us to say, don't be penny wise and pound foolish. But the reason we say these things, don't just shop on price alone. And we know it's hard to hear because people feel like, my God, I'm already paying more than I feel like I should. But at the end of the day, it's your biggest asset, and you really want to make sure that you bought the things that were going to get you back where you were. You heard me say 2/3 of the people that lose their homes in wildfires come up short on the dwelling coverage. So something like code upgrade coverage is really worth it. You heard Lisa say it wasn't that expensive, and it gives you a big bang for your buck in terms of what it costs and the premium, but the kind of dollars that it will help you, because an insurance policy only covers basically what you had. And so if you have to make improvements, you've got to have this extra coverage, it's going to be on you to pay for that compliance with the codes. Okay. Sarah, will my insurance company even let me reduce my contents coverage without reducing my dwelling coverage?
It depends on the carrier. Most carriers have now allowed insureds to go down to 50% of your dwelling limit. Your
Okay.
personal property and your other structures are always going to be a formula of whatever your dwelling limit is. You can also reduce coverage if you don't have a lot of other structures or detached structures. Most carriers let you reduce that coverage as well.
Okay. So same, I was going to ask Lisa this question. Other structures, are you seeing more flexibility? You know, I've been giving this piece of advice now for a couple of years, and I get a lot of people saying, well, I tried, but my insurance company wouldn't let me. They say it's automatic. What are you seeing with your carriers, the companies you work with?
Yeah, sort of like what Sarah said with the standard companies, it tends to be a formula. So it's a percentage usually of the main dwelling coverage. If you're in surplus lines, all of those things are optional.
Okay.
Like, or on dwelling, if it's a rental property or so on, you can kind of fiddle with those things.
Okay. Well, listen, I certainly didn't mean to rush you. I'm so grateful for this super smart, honest, you know, consumer-oriented panel. Each one of you, I just want to thank you again for sharing your expertise with us this evening. I want to ask all of you who are with us, please, if you haven't already taken our Colorado Home Insurance Survey, please just take you about 5-10 minutes. We are doing our best to keep our finger on the pulse of what's happening in your market, what options you have, and so that we can continue to do our work to try to bring you the up to the minute information, strategies, and also be your voice in the Capitol where legislation is being considered, and also work with everybody, all the stakeholders, including insurers, to try to bring solutions here to the situation so that you can continue to feel secure and protect your assets. I want to thank our panel again. I want to thank those of you who registered and submitted questions. I want to thank my team, and I wish all of you a peaceful rest of your evening. We're here for you. And to give you the straight scoop, we've got your back when insurance matters. Thank you so much, Kelly, Lisa, Sarah, Lisa, Angie, and Ben. Good evening.
Thank you, Amy.